Hello, today is Wednesday, the 4th of February, 2009. This is Brian Shannon from Alpha Trends, and we saw another very wild session here today. Market finished, the NASDAQ that is with a gain of 4 cents or 0.13%, but the intraday action was, felt a lot worse than that. We had seen a big rally early on, and we'd seen that completely fail, and the volume pick up as the selling came. We also, where this market rallied up to was, again, this two-thirds retracement from the election high to last year's low. So this area right in here at about just under $31 a share remains a critical area for supply to be released, it seems. And it also basically tied the level that we had seen last week right in here. So we are still above this 29.60 level, but really not giving us much reason for hope in here. This market remains incredibly volatile, and again, if you're not day trading it, then early on we saw a huge, real nice rally in here, followed by a very low volume consolidation, little flag in here, then continued upside, higher highs and higher lows. The market came down, tested that VWAP, and then when it broke it in here and then retested it, then it was, lights out for the market for the rest of the day. It got real choppy here in the last hour or so and really didn't give much edge, but it finished feeling very weak in here, and to me it seems as though the market is likely to fail again here in the short term. We've got this level down here near 29 that's going to be important. Of course, we've got 29.60, 29 is this trend line, and on this daily time frame we can see that actually this trend line as well that I'd pointed out on the blog earlier is where we had seen that selling come in. So it was this trend line, the two-thirds retracement, and last week's highs right here on the 10-minute time frame that where we saw the selling. We'd also seen basically the inverted head and shoulders pattern completed. Our objective there was about $30.40. And again, you've got to keep an eye on this daily VWAP. When it breaks back below there, it says the sellers are back in control for this session. Now, if we take a look, going back to the beginning of the year, one encouraging sign for the NASDAQ, and the NASDAQ finished positive yesterday and today for the year. So this 29.50 level is the volume-weighted average price, 29.51 or so for the NASDAQ year to date, and that's going to continue to be a pivotal area as well. The biggest reason for concern, let's just get right to it, is the financials. The financials were down a dime today, or another 1.1%, and this market just seems to be teetering here on the edge of the cliff here. We've got that's not what I meant to do. We've got this little uptrend line here that is seemingly, it's being tested, maybe about to break. We've got lower highs coming into it. We've got a declining 5-day moving average, and basically the lows from Tuesday just under $8.80. I think breaking that, we could see a very quick and fearful sell-off that brings us probably down towards this $8 level. So the financials continue to be the biggest reason for concern in this market. Looking at the 10-minute time frame, you can see that we had a good rally early on, but in here what we had seen was that we'd seen some lower highs coming into this daily VWAP. We saw a break, that level test, and then a nice pattern of lower highs and lower lows, and then real choppy trading in here this afternoon. But we did finish near the lows, and just seeming as though it may break this level, and if it does, then we could see a very quick and severe sell-off. So remains a lot of danger. Of course, you got to be open-minded to anything. These rallies seem to come out of nowhere for no reason, and if you're stubborn about a position, it can be very costly in either direction. The oil, we looked at this. I said yesterday, getting above and holding above this 5-day moving average might pave the way for some upside. It failed once again in here. Oil remains broken. One day it will rally, but again, if they, I'll go back to the old saying of if they don't scare you out, they'll typically wear you out. The volatility is diminishing in here. We've got these lower high, the market bounces, but not quite as high. And it's like I explained in my book, it's the bouncing ball that's dropped from the 14th floor, rises, rises up to the 10th floor, and then the next time it bounces, it rallies up to the 10th floor, the 6th floor, and runs out of momentum, runs out of energy, and that's what seems to be happening in oil. The Russell 2000 was down 33 cents today. This market, as I said, the financials are the biggest reason for concern. I think that the Russell 2000 continues to be a real drag in here as well. This trend line seems to be pretty important still. So we've got what looks like a reversal day here. We've seen a big rally early on and then selling off. We have these lower highs right now. We're below the 50-day moving average, which is actually, interestingly enough, heading higher. But only price pays here, and it's just looking very ominous, particularly if we break below 43 or so. Looking at a 30-minute time frame, we can look at just these recent little trend line in here, giving us a little bit more reason for concern if we break below 44. We do have a declining 5-day moving average, and when the 5-day moving average is declining, you don't want to trust rallies. Doesn't mean you can't trade them, but you don't trust them to hold. And we had seen same thing here. This market held above that VWAP nicely throughout the day, kind of chopped around back and forth in here, broke down, found resistance just underneath that VWAP, and then a real nice sell-off in here that created the basis of this lower high right in here. And now we're looking at the lows in here of the last couple days as well, which is about 44.50. I think breaking that 44.50 level, then we're probably going to come down towards that 43.5. So I think there's maybe the potential for a pretty quick dollar on the downside in there. And again, the double inverse Russell 2000 is the TWM, and if you're really looking for a bang for your buck, you can look at the triple, which is the TZA, which is supposedly going to give you 3 times the inverse percentage movement as the Russell 2000. Let's go ahead and take a look at the semiconductors now. The semiconductors started out real strong and finished with a decent little gain, but they're still range bound in here. We had big volume, but a move that failed, and the move failed in the same way the rest of the market did. We had a nice rally up with some volume, low volume consolidations, and then these slightly lower highs as the market came down, tested that VWAP, and the VWAP worked very nice today. So to show us where those reversals came in, we closed down above this prior level of resistance in here, and that will continue to be important as far as potential support 1760. But I think the bigger picture, Russell 2000 and financials, give us more reason for concern than what this chart may indicate. We have this little pattern of higher lows in here, but again, we're in a bear market. Daily time frame is mainly, you can look at the daily time frame as more neutral than anything. The longer term time frame weekly is down, so you got to give the benefit of the doubt to the sellers in these types of conditions. The S&P 500 is also another big reason for concern. Is this market, I'd said yesterday that maybe we're going to see another day or so of rally and then a lower high in here, and this could be the way the market is unfolding, that if we break down below this low near about 81.5 and that trend line, then maybe that the only thing next that could potentially slow a decline down is about 80, and then I think you're looking at a retest of those lows. It remains very dangerous. The declining 5-day moving average here in the 30-minute time frame. The market, of course, did get above that right from the start, but and you can trade those. But when it starts to distribute and then break below and hold below that VWAP, and the VWAP starts declining for the day, it tells you the sellers are getting back in here aggressively, and we were never able to come up to that more important $86 level. So we're still falling short of that, and the trend line here from late last year's lows is in jeopardy here. We have a lower high. Breaking a lower low could be very damaging here, so you've got to continue to be extremely careful in this environment.